Well, folks, as somebody that's been on YouTube doing finance videos since 2016, I've been here to kind of see this whole thing play out, right? And what I've noticed on YouTube is many times we can get into an echo chamber. And it's unfortunate because, this is the same thing that happens on a platform like Twitter, right? Where it becomes like an echo chamber around certain things. In YouTube finance, we are an echo chamber. And, in 2021, obviously the echo chamber was, everything was going to the moon. And, the meme stock craze and just everything around that, right? Call options and just positivity and ... right? Well, right now, let's be quite clear. We are in an echo chamber of negativity. I can't go on YouTube. I can't do anything without recessions and the biggest crash ever and just negativity, talking around the same similar points that everybody else is talking about how high inflation is and ... right? And so we're in our own little echo chamber right now, and it's unfortunate. And, the bad side of this is like in 2021, if you came out and spoke down about the market, you basically got no views, and people brushed you aside as like a FUD master, right? And now it's like if you say anything positive, you're almost like not cool, right? And it's like, what are you talking about, man? We're going down way more, these sorts of things. And it's just unfortunate because the market is much more complicated than just being an echo chamber and just hearing one perspective. And so in this video, what I want to take you through is I want to take you through the positive perspective. And I want to take you through a lot and show you guys some things that I think are very important. So if you would just think it's the end of the world and, we're going to go down forever and ever and ever over the coming years, I just think you should maybe, think about these things and consider these things I'm about to go through in this video. And I hope you guys appreciate this video because, it's very easy to just talk about the same stuff, everybody else is talking about constantly, right? And just do another video about how high inflation is and, debt and all these things, right? And those are important subjects to talk about, and we talk about those on the channel. But, to not look at the other side and at least consider it, I think it's a massive mistake, as it always is in the financial market. So yeah. Alrighty guys, first thing you got to understand about the stock market, there's rules to everything in the stock market. And I almost look at everything in life as kind of like a game. And there's certain rules to this game that you must follow in order to succeed in that game, right? And the stock market is a game. And there's two core rules that I found probably back in 2010, honestly, that once I really started to understand the stock market and figure this thing out and okay, there's two core rules I found. The two core rules are: one, it's rigged to get you to buy or sell stocks at dumb prices, right? The FOMO, or the fear of, oh my gosh, we're in a crash, I got to sell. And it's rigged to go up over time. And these are the two most true rules. And if you never, if remember anything else I ever teach you guys on the channel, remember those two things, okay? Because they are both 100% true. It's rigged to get you to buy or sell stocks at dumb prices, and it's rigged to go up over time, okay? Now, the CPI has obviously been the biggest thing that everybody's been focused on, right? Inflation, as it should be. It's a very important subject. We have inflation that's at a 40-year high. But we got to talk about this on a little deeper level. Why do we have this crazy level of inflation? Why is CPI so high? And, obviously the CPI being so high makes the Fed want to continue to raise interest rates, right? Which, is debated if that really slows down, some of these subject lines or not, right? And the biggest reason why CPI has gone absolutely insane, the most overwhelming, is clearly energy, right? Energy has gone through the roof, right? Food and everything else has gotten more expensive, and some of that's because of transportation that goes back to energy. But let's be quite clear, energy is the reason the CPI looks ridiculously high right now, okay? Now, when it comes to energy, think about this for a moment. Oil, right? Everybody has to pay, a price at the pump, right, for gasoline. And those gas prices are dictated by what oil price does over time. Now, we have had an absolutely parabolic move up in oil over the past, let's call it 12 to 18 months, a parabolic move. I mean, that's a move we just pretty much haven't seen in that quick of an amount of time ever. The closest thing to a move like that we've seen is really back from about '01 through about 2008, right? But that played out over many, many years. This move has been basically just as insane, but it's played out over about a 12 to 18 month span. Now, something we do know about oil is it's a commodity. And as with all commodities, It goes through some crazy hype cycles and it goes through some massive bust cycles, but ultimately at the end of the day, it trades in a normal range, right? And the normal range oil has been trading at for some time has been $40 to about $100 a barrel, right? And it's very difficult to get oil to higher prices than that outside of massive just speculation, because the thing to keep in mind, and I don't think a lot of people even realize this, is the oil and gas market and commodities in general is not as simple as the supply and demand. It's also speculation, right? The same way you can't look at like a stock price and say, oh, the stock price is up, so that means the company's great. It doesn't mean that. It could mean that, but it could also just be speculation in that particular stock at that time, right? If a stock price is down, it doesn't mean that company's garbage or that company's trash. It's just like people are selling it off and speculating that it's going to go down more, right? And so these things happen in the markets. And so the oil and gas market, these are also driven by speculation and not just supply and demand like you might have been told, okay? That's going to drive oil price and natural gas price over time, the supply and demand, right? But in the short term, speculation runs rampant in these markets. And this is something we've seen play out over time, but it's not lasting. Let's just call it that. It is not something that's lasting whatsoever. Now, here's what's actually going on, right? The rig count continues to skyrocket. Basically, just in the United States, rigs are up 272 versus this same point last year. In Canada, rigs are up 41 and international 66 now at this point in time. Guess what? Here's the deal, okay? If you could drill for oil like you want to do it right now because you're making bank, okay? When oil is around $100, everybody's making a lot of money, okay? Just bottom line, doesn't matter if you're in the US, it doesn't matter if you're in the Middle East, doesn't matter where you are. You're making good money. And so here's a situation where everybody's looking and like, man, we can make some sweet profits. Let's get the rigs up and going. And that's what happens, right? Now, when oil price obviously crashes, right, or goes down in a substantial way, then you see rigs starting to drop and drop and drop because people start not being able to be profitable. And so rigs start to drop. But rigs have been going up, going up, going up, and are going to continue to go up if oil remains around $100 a barrel. That's just a bottom line, right? Which obviously puts way more supply in the market, okay? Now, on the demand side, everybody has obviously speculated that this was going to be let's call it a red hot travel summer. They call it the revenge travel year, right? And the reason this is a big thing is because Rona had a lot of people obviously in lockdown. And here we are in this moment where this is like the first real summer in the last several summers where people can get out and about and go most places without masks or any of that and the worry about Rona. So here we are in this moment in time where it's a revenge travel summer, and this baby's going to be coming to a close soon, right? School starts in a month from now in almost every single state. And so we have a little bit to go left in this massive travel summer where everybody's flying around everywhere and everybody's driving around everywhere and going on all these trips because it's a revenge travel summer. It's going to be coming to a close here soon. And so you're losing a huge bullish thing that you had going for yourself in regards to the oil market. Is like, oh, everybody's going to be traveling like crazy. Yeah, that's about to come to a close here, okay? Now, also, simultaneously, Biden right now is in the Middle East and he's fist bumping everybody. I don't know if you guys saw this, but yeah, he's fist bumping, all these different folks over there that are very, very important, right? And, from my understanding, Biden's over there trying to get basically the Middle East, OPEC, to increase how much their oil capacity, let's just call it that, right, to bring down prices. And so, yeah, he's out there, man. He's fist bumping everybody. It seems like it might be going well. And it's interesting. I heard the Biden administration, they thought that by fist bumping, it was going to show like that they weren't as friendly with these folks versus like a handshake. That's what I'm hearing. Here's my ranking, okay? This is Jeremy's ranking. If I hug you, I really care about you, okay? If I fist bump you, we're cool, man. Like, I like you, like we're good, right? If I shake your hand, that means I don't really trust you. So I think a fist bump is actually above a shaking a hand. So it's just, somebody get that over to those folks so they kind of at least understand that, right? Now, the truth is, in the Middle East, it is ridiculously cheap to make a profit on a barrel of oil, okay? I mean, there's, from what I've seen, is from a lot of studies that have been done out there, and this one was done a couple years ago, is that it's at least 14 times more expensive for somebody to get a barrel of oil and produce a barrel of oil in the United States, at least 14 times versus the Middle East and Saudi, right? So here we are in this moment where Saudi Arabia, and let's just call it OPEC in general, the whole Middle East. I mean, they like making a lot of money on oil and they make some crazy profits right now, right? But to be quite honest, I don't think they would mind necessarily oil to be at $50. And the reason being, if oil's at $50, then the United States becomes much less of a player, because then as United States producers, you're hardly making any money, if you're making any money, right? At $40, it's almost impossible to make money if you're a US player at that point in time. Meanwhile, for Saudi Arabia, if oil's $40, $50, they're still making bank. They're still absolutely making bank. And they can take market share in that sort of market, right? When oil's elevated like this, everybody can drill almost everywhere and make a good profit, right? But if you drop oil price, the Saudis are still going to make money and they take market share. So they're in almost a win-win situation, right? And so I just think that's some other kind of food for thought. And I don't think a lot of people even really understand or realize in the end. The Saudi and the Middle East, they win don't matter what. Okay, don't matter what, they're in a position of power, and if they can negotiate certain other things from, let's say, the United States and increase production, right, and then simultaneously knock out a bunch of the U.S. players, because all of a sudden, oil price goes way down and the U.S. players can't make money anymore. Meanwhile, they also negotiated for other things, let's say, that are their benefit. Oh my gosh, okay? So they're definitely in a huge position of power when it comes to oil, and they always have been, and they always still will be, right? Natural gas, this is another big thing, okay? Now, there's a ton of speculation in the natural gas market, okay? I mean, a ton of speculation, and I can tell you, what has been going on in the natural gas market is not normal. We're in pure speculation mode when it comes to natural gas. And this is not the first time this has happened before, okay? If you haven't been caught up, basically, the whole government looked into excessive speculation in the natural gas market back around 2007 or so, 2007, 2008. And the reason being is there was a huge speculation going on in the natural gas market back then. Here's basically what was going on. Look at these insane spikes in natural gas, right? Just absolutely insane. And so the government looked into this. I wouldn't be surprised if natural gas continues to go insane, that the government will potentially look into things again when it comes to natural gas and the speculation that goes on there. Because, recently it hasn't been acting normal once again, right? And the reason the government cares about this, right, is at the end of the day, if energy prices soar and they go up massively, well, that could potentially get government officials to lose jobs, right? You can get voted out of office if energy prices continue to go up and up and up, and consumers are hurt. And so this is a big factor, and this is why the government cares so much about this. If there's excessive speculation in the crypto market, no one bats an eye, because it's just some people gambling money around. If there's excessive speculation in stocks, and it's some, stocks that most people aren't in, it's like, who cares? But when it's something that affects everybody, which the natural gas price can affect almost everybody in the United States of America. When it's the oil price, it affects basically almost everybody in the United States of America. That's a whole different animal. And that's when the government steps in and says, whoa, what's going on here? This level of speculation isn't okay. And they start putting limits on it, and they start making all these moves, right? And so, these are definitely factors to kind of keep in mind. Natural gas has been in speculative bubbles in the past, and it's probably going through one right now as we speak, okay? Now, in terms of the overall, so what you're looking at right now, this is a commodity index, essentially, okay? GSG, you could add it to your ticker if you ever want to, keep an eye on it. And so this basically shows you just commodities in general. Now, what we've seen is commodities in general peaked on June 8th and have basically started to go down since that time, right? In commodities, they're commodities. They're not going to go up forever. This is not a sustained bull rally forever and ever for these commodities. They go through some big bull cycles, which commodities have been in a big bull cycle, and they go through some massive busts, right? And likely, there's a lot of talk about recession. If there's real recession, believe me, all commodities will go down. That's just what happens in a recession. And you can look at almost all the commodities, in copper, for instance, is making its biggest downward move we've seen since 2008, right? And so that's just something to kind of keep an eye on. And all these commodities, this is not natural. This will come to a close, and this will come to an end, which will bring down the rate of inflation, right? Now, for folks that are selling stocks this year and choosing not to buy stocks during a crashing year, right? You just got to understand, these companies are going to be much higher prices in future years than they are today, right? Where they are in 3 months from now, it's anybody's best guess. But, in future years, like these stocks are going to be massively higher from here. You don't bet against these sorts of companies. These are game-changing companies that have the best employee forces, the best strategies, the best everything. And so to, bet against these sorts of companies in a crash is a huge, huge mistake. Now, if you're in a high-flying market that's at all-time highs, and you want to take some profit, sometimes that can make sense in some of these companies, right? But in a crashing market, to either sell or to choose to not buy and take advantage of deals out there, you're just always making a massive mistake. And you're making the same mistake that countless people made every single time before, right? I mean, it's not like this is the first crash we've gone through in the market or the first bear market. Like, we've been through a ton of these, right? And every single time, folks make these decisions to sell stocks and not buy stocks during the crash. And every single time they look back and they say, why the hell did I do that, right? I mean, I have a friend that sold his entire portfolio in March of 2020, right? And I mean, just people make those sorts of decisions and then they look back in future years and are like, why did I do that? This stock's up how much? This stock's up how much? And then other folks choose to not buy, right? Because of fear and, it's scary. And it's like, dude, it plays out the same way. It's like, it's the same story again and again and again and again and again. But folks expect a different ending to the story, right? It's insanity. It's a definition of insanity. And it's crazy, man. It's absolutely crazy that in a crashing market, people choose to sell and they don't take advantage of deals. And it's what's always played out and what's going to continue to play out. Now, the Fed, they're obviously raising interest rates. The Fed funds rate should be 2% here very shortly. And everybody's looking at the Fed funds rate and they're like, well, Fed funds rate is going to continue to go up. Interest rates continue to go up. Bad for the stock market. It means the stock market has to go down. And here's the thing, right? Everybody's also simultaneously talking about recession, right? Job loss is coming. Well, guess what? If recession actually comes, if job losses actually come, if economic worries actually come and they get concerned, what do you think they're going to do? Something different than they've ever done before, or the same exact thing they do every single time? Well, if we really start to have real economic worries, they're going to do the same exact thing they do every single time, which is dump interest rates and go back down to 0%. It's what plays out every time. It's the same story. This happened, a few years ago, right? Worries about the economy. Interest rates, they start to dump them. Then obviously Rona came. They took it all the way down to 0. Look at the great financial crisis. Interest rates up near 5% Fed funds rate. And a great financial crisis comes and they dump interest rates, right? Tech bubble, boom, interest rates way up there. Oh my gosh, the whole tech bubble, falls apart, right? And they dump interest rates all the way down to 1%. It's the same story again and again and again. So if there is this actual recession that comes, right, that's any bit of significance, they're going to drop interest rates to 0 again, like they do every single time, right? And if you're actually in recession, all commodities will dump, which will kill inflation completely. So, you just got to put these pieces together and start to understand, oh my gosh, and here's the thing. If interest rates dump down to 0 again, then basically the algorithms are going to pay, and investors in general are going to pay much more for stocks because of the way they do their discounted cash flows and dividing it out by whatever the interest rate is at that time. Well, if all of a sudden you're at 0, you're at a whole different situation, right? And you're willing to pay much more, especially for growth stocks. So, these are just very important factors to consider in the market. And when you kind of realize, oh my gosh, if this happens, well, this is going to happen. And they're not going to do it. They're not going to all of a sudden do things differently than it's been done before. They know how the story goes, and they're going to act the same exact way they always do, right? Now, on top of that, I don't know how many people are caught up on this. California is going to have a bunch of money going out there. Basically, most California residents are going to get anywhere from $200 to $1,050 in these California, let's call it inflation checks that are going out. Those are going to start going out in October and are basically going to run through January, okay? So that's going to be a massive slosh of money out there coming. But you think it's just California doing this? Oh, no, okay? It's not just California. 14 states now have approved stimulus checks as inflation continues to rise, okay? So, everybody can debate if this is good or bad or, right or wrong. I'm not going to get into that. All I know is there's going to be a massive money pump out there once again. And, this is just what happens, right? This is just what happens. And, people can get mad at it or it's right or it's wrong. At the end of the day, if people have more money, the money's going to be spent out there, right? Some food for thought there, right? And so I take it back to where we started this video at. Remember these two things. The stock market's rigged to get you to buy or sell at bad prices, and the stock market's rigged to go up over time. And this is just the story of the stock market, okay? And you can choose to get caught up in all the negativity and all the bad stuff and get into the echo chamber that is YouTube right now. Or you can kind of understand these things on a little deeper level and realize, oh man, might be getting played a little bit in this market, and maybe I should take advantage of some deals in 2022. And, if the stock market, especially if it crashes anymore, you very rarely get these sorts of opportunities in the market. It's just factual. And, every time people expect it to be a different outcome and they make a different excuse, oh, this is why we're not coming back this time. And every crashing market you've ever been in, throughout history, they always made an excuse why this time was going to be different. And it always finished the same exact way, okay? Hope you guys enjoyed this as always. Much love. I appreciate you joining me. Also, just so you know, I made a couple courses actually free right now given the market conditions. So if you want to check out those courses, I have a beginner course for stock market investing and also like a little more of an advanced course. So if you want to book a little 15-minute call with somebody I'll have from my team, they'll get you enrolled into that course and ask you a few questions. And you don't have to buy anything. You don't have to join my private stock group to get access to that. So I hope you guys enjoy that. As always, that will be pinned comment. Thank you and have a great day. Buy the dip, never trip.